All right. So today, we're gonna go over my favorite thing with trading, the most beautiful part about trading, in my opinion, honestly. Um, we're gonna go over price action, specifically a more advanced level. So if you're new as far as trading, just have patience, pick up what you can. If there's something that you don't understand, the last part of this call, I'm gonna have it open for questions and stuff. I'll answer like whatever question you guys have. But we're gonna go over sniper entries and what exactly I look for as far as like when I'm ready to enter a trade, what I wait for, the confirmations, um, just stuff like that. I have like, bro, when I tell you I have a whole like album of screenshots filled with sniper entries, bro. I'm talking about entering on Wix, entering like at the top of Wix, like, bro. We was talking about in the chat the other day. Like, I honestly forgot how to even enter on a candle at this point. Like, we're only entering on Wix from this call forward. So I'm gonna show you guys how to do that, and then we're just gonna practice after this. So let me go ahead. I'm gonna share my screen now. Let me pull up a new chart. Let me do I like EA. EA been looking clean. Let me see something. The call is gonna be recorded. I already started recording it, so for those who are gonna be late, if you guys want to get the call afterwards and study it, whatever, um, I'm gonna send it out to you guys. So as far as price action goes, first things first, what you want to do, you want to already mark up your chart. This is going to be one of the last parts of like confirmation. You want to already have your charts marked up, zones, trend lines, like whatever you do. This is just going to be the final confirmations, and then you can enter the trade. So off bat, I'm not going to mark it up or anything, um, but I'm just going to show you as far as like what I look for. The main thing with price action is not always the candle itself, but like I was saying, is the wicks. You're gonna want to look for those wicks. The wicks tell the story of where the market is trapped, where the price is trapped, and where the market's not gonna go. So, for example, for those who know, like I can already see so many different. Actually, I really like EA. So I'm gonna show you, and like I said, this is a more advanced level of training. So if you don't understand something, let me know so I can clarify it as well. Um, you want to look for example something like so off the bat. Like I said, you want to use price action as the last confirmation. So let's say we were going to enter. This is the 1 hour. So let's say we thought we wanted to catch this drop right here, right? How would you enter at the very top of this? How what would you look for to see if you can get the very best position at the top of that, right? What you're gonna want to look for or pay attention to are those three wicks. I'm sorry, I still got people coming in. You're gonna want to look for these three wicks right here. So for example, I'm gonna just show you the psychology behind what this means. So what this means right here, that means that anything above this price is where the market makers has their money. This came up once, came up twice, came up three times. It did not go past that level. So you're not going to enter on the 1 hour. What you're going to do is you're going to drop down. Let me make sure I can find it. You're going to drop down to the 15 or the 5. depending on your level of trading. I like to enter on the 5. The 15 is good. Sometimes it really just depends on whatever looks best. Where is this thing? All right, here we go. Yeah, this is beautiful, bro. Price action is so beautiful. So just off of those wicks, honestly, those 3 is enough for me to enter. Once I saw that it came up here and then dropped and this came up, first of all, what you need to do is you need to know your candle patterns. So off the bat, I see a gravestone doji right there. So you need to know that, okay, this means it's going to drop. That's a sell candle pattern. So 1, it gave you a sell confirmation of a candle, and it rejected this same price. Let me use the horizontals so I can show you the same price. This right here, it gave 1 touch, 2 touch. Once I see that this 3rd one did not go past, I'm entering off the bat. That's all the confirmation I need. Obviously, that takes time. You're not going to be able to do that right away. Whoa, my bad. You're not going to be able to do that right away. But over the time, once you see, okay, 1 touch, 2 touch, 3 touch, you enter. If you missed this first entry at the wick, why can't it? Hold on. If you missed the first entry, it's not letting me draw on this. All right, I'll put the. If you missed this entry right here, and then you missed this entry right here, it gave you an engulfing candle literally right after. So for those who don't know what engulfing candle is, it's when they start at the same exact price, and then the second one passes like that. Engulfing candles are nice because they carry so much momentum.
Yo, Josh, sorry, we can't see your screen, bro.
Oh, shoot. My bad. Can you see it now?
Yeah.
You can see the chart?
Yeah.
Not right now.
Yeah? Okay, cool. So my bad. All right, so you're gonna want to look for these 3 touches. If you miss this wick, you're gonna catch this engulfing candle that it gave literally right after. Now on the 5-minute, this is not a wick, but this is the same wick that it gave on the 1 hour. So you would enter literally as soon as it passes this. What I like to do, I'm not going to tell you guys how to trade. I'm just showing you exactly what I look for and how I trade. What I like to do, I put the stop loss right above the previous candle as far as engulfing candles go, just because I like to minimize my losses. So if this were to reverse, I'm only getting, this is a, can't even see it, 11 pip stop loss. That's kind of a little bit too much for me. So what I would do, I would put it at the candle like that. I wouldn't do it at the wick. I would do it right at the candle. And like I was saying, engulfing candles are so nice because they carry momentum. This one came and it dropped, and then it came to retest a little bit. And then we'll go over this one because this is another chart, not chart, candle pattern. And then it dropped. So you would, that's really all you're looking for is the wicks. The wicks are going to tell the whole story of where the market was going. So if you saw, okay, 1 touch, 2 touch, 3 touch, now you know anything above this price, it's not going past that. You can trust that this is where the market makers are making their money. It literally touched the same exact price and then dropped. So you can catch this wick right here and you catch the whole right down. Now, as far as this one right here, this is a new not new, but this is a candle pattern that I just recently found out about. It's called the bullet pattern, and it's when the wicks do like this, which is what it did right here. This is a sell pattern. This is just showing that it's same thing as this. It's just showing that it's rejecting these prices each time it rejected, and then you catch that all the way down. That all price action is, it's really tricky, honestly, and it gets on my nerves, but I love it. Price action is all about patience, and it's all about training your eye to see it when it happens. I'm gonna go over another example. Okay, perfect, right here. What I forgot to mention is that you want to look for price action inside of chart patterns. So you don't want to see, for example, you don't want to see a bullet pattern like this and you enter just because, oh, this is a bullet pattern, means it's gonna drop. That's not good enough. You want to look for a bullet pattern on top of a M. So it's gonna come up, and then on the second leg, if it gives the bullet pattern, then you enter for the drop. You're gonna enter on that third wick. Same thing with, for those who know the RYG pattern. You're not gonna enter, oh, I see RYG, let me enter on the green. You're gonna look for it on the M, and you're gonna wait for that green, then you enter. Stop loss at the red. Off that strategy alone, I've caught wick entries. And for those who don't know wick, the RYG, I'll go over it real quick with you. I'm not gonna dive too deep into it, but I'll run by it real quick. If I can find a clean one. Because that's one of my favorite forms of price action. And those are the ones I've caught literally like my best entries on. You're gonna look for the RYG method on top of, not on top, but you're gonna see it before any major drops. And just before I go there, this is another bullet pattern right here, another example of that. Let me see if I can find a clean one though. I don't want to just show any type. All right, so this is a pretty good one. I'll show you this one. So as far as RYG goes, RYG is red, yellow, green. It's called the stoplight method. I'm gonna run through it real quick because a lot of you might already know it. Because I've done this call a few times. You're gonna put horizontals. Okay, so first off, I'm skipping steps. Sorry. First off, you're gonna want to look for these three wicks like this. And you see how these wicks literally drop down each time, like steps. That's what you're gonna want to look for. It's literally showing, all price action is where's the market and where does it want to go. Right now, this is where the market is. Where does it want to go? It's literally showing you it's stepping down each time. It's showing you that it wants to drop. That's all price action is. So this is showing you, okay, dropped here, next step down, next step. It's literally like stairs. You take that all the way down. Let me draw the horizontals just for the new people that this is the first time they're seeing it. You're gonna put the first wick, you're gonna draw horizontal, you're gonna make it red. The next one is gonna be yellow. Once you see this yellow wick form, you're gonna automatically look for this green one. If this green wick does not go past this yellow, that's the RYG method. You're gonna enter as soon as this green, either when it forms or once you realize, okay, like I've seen this a few times, I'm gonna enter on this wick. That takes practice. I don't recommend you just jumping in and doing it. But once you see it a few times, like I said, I've entered on just that alone. Once you see this green, you're gonna enter on the green wick right here, or green candle. You're gonna put your stop loss at the yellow. If you wanna give it a little bit more room, you're gonna put it at the red. This is gonna minimize your losses. Because this one, okay, let's say we entered at the candle of this, put it stop loss at the yellow, that's a 9 pip stop loss. This went for 80 pips. So you're risking 9 pips for 80. Let's say we put it at the red. You're going to be risking 12 pips for 80. That's a good ratio right there. So this method alone, you're gonna bag it a few times. Like I said, I'm not gonna dive too deep into it just because of how much price action we're gonna go over. But I just wanted to make sure we went over it because I'm gonna be pointing it out. There was a super clean one. I don't want to. I saw some on US 30. I don't want to really go through it just because there's a lot of people that don't trade US 30. But let me show you. Okay. So one of the main things that I look for, let me see if I can find a clean one. This might be it. Yeah, okay. So perfect. So you see how this wick literally touched the same price? This is beautiful, bro. This wick right here touched the same exact price, or vice versa. This wick touched the same exact price as this wick. That's what you're gonna want to look for. This is how you can get sniper entries. Super sniper entries. So how you would like point this out, all you're gonna do is put a horizontal right at that price right here, and you're just gonna wait for this to come back down and touch it. That's all you're gonna do. Does it always play out like that? No, it doesn't. Sometimes it might shoot below it, but sometimes it's gonna do exactly what it did this time. It touched the same exact price, and look how it bought all the way up. So let's say we caught it. We'd literally catch it at that wick, and this went for 300 pips, and then still rising. Still, you would still be in this trade now. It went up, follow market structure, hasn't broke. You'd still be in this. That's what you want to look for as far as entering on wicks. That's how I've caught wick entries. The market literally repeats itself over and over and over again. It's going to touch the same prices it did a month ago. It's going to touch the same prices it did a few days ago. This literally came down and touched the same exact price that it touched. What is this? In April. It came back down, touched it. This is the 10th. So a week, 2 weeks later, it touched the same exact price and then bought up, doing the same exact thing over and over and over again. Another example, let me do, okay. So this is, bro, and I didn't even want to go over this, but it's so helpful that, like, bro, you guys are gonna be sniping next week, bro. I'm telling you. So what you want to look for. So for example, let's say this is dropping, right? And we're seeing that it's coming back up, but you know it's not gonna buy. You know it's gonna drop. So you want to catch. You missed this original entry on this head and shoulders, right? So you want to catch a retest for the remaining of the drop. What you're gonna do, or what I do, I look for same thing with the wicks. I look for wicks that might get touched again. And I've done this on live calls before with my team. All I do, I call them price action zones. Super advanced, bro. All you're gonna do with that, you're gonna start, same thing with these horizontals like this one. You're gonna start it at the candle and pull it all the way, and then make it as big as this wick. You're not gonna do the whole candle. You're gonna do just the wick area. Now this is good because it's gonna show you same thing that we just went over. The price that is not gonna get touched again. So this came down. This was dropping. It came up. It touched this price and then dropped again. Came up and touched the same exact price. Literally. I cannot make this up, bro. What you're going to do with this, you're going to enter. Well, sometimes I like to wait. Depending on the pair, I enter as soon as it hops in the zone. And also depends on how big the zone is. Sometimes they're smaller, sometimes they're bigger. If it's a bigger zone, I'll wait till it gets to like the middle of it, If it's a smaller zone, like a 10 pip zone, as soon as it enters this zone, I'm putting the sell in. I'm going to put the sell in, and I'm going to put my stop loss above this zone. So as soon as it touches, I'm getting in. I'm getting in the zone. I'm putting my stop loss right up here. I'm going to catch this drive down. Now, most times, this zone is going to be, like I said, 10 pips, 5 pips. Like the wick can only be so big sometimes. So let's say it's a 5 pip PA zone, right? You're going to enter as soon as it gets in there. You're now risking 5 pips. If it goes past this, then it's okay. You lost 5 pips, 10 pips maybe. That's okay. Now what you're going to want to look for if you do get taken out, you're going to look to see if, like, let's say it did go past this, right? It went past this zone. You're going to look to see if it drops back down and then forms another wick just like this one and closes at the bottom like this. That's what you're going to want to look for. So it's okay if it does go above it, as long as it closes at the bottom. If it closes all the way up here, then don't even go in. That means it might be buying. But if it does this, where it literally touches the same as that price, bro, enter the trade, put your stop loss above that price, and you catch this all the way down. For this example, I'm pretty sure the stop loss is going to be a little bigger just because we're on the 1 hour. Let me see how many pips it is.
Hey, Josh, there's people in the waiting room.
Oh, shoot, my bad. Oh, whoops, my bad. It didn't even give me a notification. All right, cool. Where is it? So you're gonna enter as soon as it goes in this price action zone. You're gonna put your stop loss above here. In this case, it's 23 pips. Would I take that? No. I'd wait for it to go a little higher. So for example, this bullish candle, it went all the way up, it touched it. Let's say we waited till this one formed. Once I saw that it respected that same price, I'm probably going to enter right away, to be honest. But let's just say we waited till the next candle. Now, you can see that this next wick literally dropped down and respected this level again. Hold on. Respected this level one more time. That is when you would enter. Now, because, and that's why I said price action is like 90% patience, because if you would have waited, now you're entering up here on the wick and the stop loss is only 10 pips if you put it above that price. Now you also have to calculate like the spread. If the spread is 2 pips, you just add 2 pips to it. Now it's a 12 pip stop loss, stuff like that. But you're risking, let's say for this example, 10 pips. This one dropped all the way down. Now you caught a wick entry, you risk 10 pips, and this one dropped all 300 pips. So let's just say, for sake of argument, let's just say you didn't catch the wick, right? Let's say your stop loss was the original 20 pip stop loss. You're risking 23 pips for 300. Just because you saw a price action zone. And I'm going to show you multiple examples of this because literally, bro, it happens all the time. And this is literally my strategy for US 30. Literally. You're gonna just look for these zones that they're gonna get touched again. So let me show you another example as well. See if I can find a clean one. I want to let me just show you guys US 30 honestly, because I know there's so many. So I was actually doing this one on a live call. I don't remember what day it was. I think it was Thursday. We missed the trade, but this is the strategy that I used, and it ended up playing out. Not missed the trade, we missed the sniper, and I was super tight because we would have caught this whole drop. Let me drop down to the 15-minute. So I'm gonna show you US 30. I'm not telling you to do this on US 30, because I'm not gonna be responsible for that. But you can use this same strategy on the other pairs. It literally does the same thing. I'm only showing you US 30 because I've seen so many examples on this doing literally the same thing. So you're going to use the same exact example. And this one is actually good too because it went above it. Start it at the candle closing / opening, and you're going to just do the whole wick. Now, for this example, I'm not doing this wick just because there's so many other wicks in place. So I'm going to do this second one, like right here, and then just drag it across. Once you saw this, bro, and this was the actual entry that we missed. And I was super tight. Once I saw that this was coming down, it dropped, and then it was coming up to this same exact zone. I was looking to enter right here. Was it this one or was it? Yeah, it was this one. I was looking to enter right here just because of this, literally just because of this zone. You're not going to use this zone only to enter trades. Like I said, you're going to use these all as confirmations. But once I saw, okay, this is going to drop, this is going to drop. Now we didn't get up here. So you're going to wait for it to retest. We would have caught this entry right here. Now it did go above the zone, which is why I said this is a good example, because it went above the zone, but then when it closed, it formed a gravestone doji. As soon as it closed, or as soon as it was like a minute left to the candle closing, you saw, okay, I've seen this candle before. This is a gravestone doji. I know it's gonna drop now. You could have entered right there. Or you could have entered at the second candle, but obviously, as you can see, it would have been too late by then. Look at this big bearish candle. This one alone was 1,000 pips. So let's try to get the wick entry instead of like saying, okay, like let me just wait. Then do the same thing. Put your stop loss above the zone. This one went for, I was so tight, bro. 8,000 pips. Easy. It's gonna happen on every single pair that you look at. They're gonna do the same thing. I know GA is a good one just because of how many wicks is on here. So for example, this is actually a really good one too. And I'm not showing you this as in this is what's gonna happen, because I didn't even look at the full market. But this is what I would look for. First of all, these literally touch the same exact price. That's what I see automatically right away. These two right here, and this is a candle pattern, these touch the same exact price. So what I would be looking for is for this to drop down, touch the same price, and I'm gonna enter for the buy. I'm gonna put my stop loss like right down there. GA is a little stronger, so I'm gonna probably go down to the 5 minute. Let me see how the 5 minute looks. Yeah, this is beautiful. I would look to enter. Now, obviously, like I said, I didn't look at the full market, so this could be dropping below it. I'm just giving you an example of what I look for as far as entries. I would wait for this to drop down to the same exact price. I'd probably wait like a few seconds just to see if it's going to drop below it or if it's actually going to respect it. I'm going to enter as soon as it touches it. I'm going to put my stop loss right down here every single time. Does it always work? No. But I'm telling you, if you can catch, bro, if you can catch that wick entry. So first of all, price action is all about pulling the trigger. 100%. When you see it happening, go in the trade. Because I promise you, you're going to regret it. I promise you. Because I know I did. I promise you, you're going to regret it. If you see it happening, and this is what I'm telling you to practice it, like on demo or whatever, and go back to the chart, train your eyes, like literally same thing that we're doing. Go back and look for different price action models. Literally just point it out. Okay, there's a RYG. There's another RYG. Okay, cool. There's a bullet pattern. Point them out so that when it's forming live, you can say, okay, cool. Here's the red. Here's the yellow. Here's the green. Let me enter there. I'm putting my stop loss up here. I'm going to catch this whole drop. Now, GA is an easy one just because, like, as you can see how many wicks is here. Like, it's super, super easy. So this is giving probably RYGs all over the place. Let me see this one here. Another one here, another one here. Inverse RRG there. Y'all not ready for that though. Let me show you this though. Where was it? I just saw it. Shoot. All right, never mind. What you're gonna want to look for is literally all I'm going over today is wicks. Literally. Oh my gosh. Okay, this is beautiful. This is beautiful. So off bat, this is what I see. All these candles close at the same exact price. Same exact price. No matter like where the wicks go, these close at the same exact price. That's price action right there. It's showing you that, bro, it's not going past this. These are all rejections. Once I saw these three, honestly, that would have been enough for me. But this right here is another confirmation that, okay, I can enter literally anywhere in this area. I'm gonna put my stop loss right up here and I'm good. I'm good regardless. Because it's not going past this. It's literally showing you that, okay, we're gonna respect the price that's up here. That's all it's doing. Now let's see how far this one went. And as you can see, I'm looking at the 5 minute. Sometimes that's what you have to do. I don't always enter on the 5. I don't always enter on the 15. But that's what I look for. So let's say we would have caught, let's even just say, for sake of argument, let's say we entered down here, even. Let's say you put it up here. I can't even see it. That's a 10 pip stop loss. And this is GA. This is a stronger pair. A 10 pip stop loss, and this dropped for another 80 pips. Like, bro, I'm telling you, I cannot make this up, bro. And then what you would look for, same exact thing. Like, bro, wick came down here. And for those who don't know, this right here is a stop hunt low. It's a stop hunt low is when the market pushes down. Okay, so for example, it's literally designed to take people out before it makes its move. So let's say we all knew that this was gonna buy, right? Like we all knew. Like we got 5 confirmations. Let's say we entered right here, and we just know that it's gonna buy. This is so that we can get taken out right before it shoots up. Literally, that's all it is. Stop hunt lows and stop hunt highs are literally not literally. It's most times associated with liquidity levels, meaning anything below this price is not getting touched again, not for some time at least. So this one, it came down, it issued a stop hunt low, it came up, gave you 5 wicks, all avoiding the same prices, and then it came down. You would have entered. I mean, you would have came out right when it came down and rejected these again. Because now you know now that anything below this is where the market makers make their money. So you're not going to stay in this trade when it gets to this point, because now you know it's going to bounce off, which is exactly what it did. So that's what you want to look for. Literally, wicks every single time. Wicks are going to tell the story of anything that you're looking for. Same thing with M's and W's. Let me see if I can find an example for that, because those are honestly the most like the cleanest. So this is a kind of a good one. It didn't play out as well though. I'll go over this one just to go over it. So this W right here, what you're gonna want to look for, this W right here. Let's say we wanted to enter on the W, right? And we couldn't find an engulfing candle. We didn't just want to enter anywhere. What I would look for, or what I look for, is the wicks. Or for this example, not even a wick, but the price action zone. Now, you're going to put it, same thing, I'm going to repeat it again just for those who don't got it. You're going to put it at the open or close of the candle and literally cover just the wick. This one came down and dipped into it just to show its respects and then buy up. Literally all it did. It doesn't always have to go all the way down to touch the same price, which is why I like the zones more than doing the actual line, because it doesn't always go down to that price. Sometimes it'll drop into the zone and then buy back up. And literally I can pull it back and it's doing the same exact thing over here. It dropped down, went back up, rejected it, went back up, came down again, went back up, gave a W, came down, dipped into it, went back up. It's doing it every time. And even before the drop, it dropped down, wicked, went back up, rejected it at first, then dropped down again, gave 3 more wicks before dropping. And I can keep pulling it over. Came back up before it bought again. It came down, showed its respect, rejected, then bought up. Price action zones are literally like super, super key. And very tricky because it's not always going to be wicks, but you're going to see some type of price action in this zone. So that's why there's an engulfing candle right here. Even though you don't see much wick, the wick is below it, but it gave an engulfing candle right after. That's what you're going to want to look for every time. So definitely just point out the price action zones. How you're going to do that? You literally just look for wherever the wicks touch the same exact price. So it's the same thing as zones. The way I mark up my zones, I look for wherever there was multiple retracements on the market, wherever there's the most touches on the market. You're going to do the same thing with price action zones, but instead of retracements or instead of candles, it's going to be wherever you see there's multiple wicks touching the same exact price. So like the same one we just went over, this one right here. Could have caught that buy up. This one went for 50 pips. Easy, quick in and out. Same thing, another zone. This one's a little bit more advanced just because of how small these wicks are, but it literally came up twice, 3 times. 1, 2, rejected here. You could have caught this sell, and then you could have caught this sell. Every time is going to do this. That is how I catch these super, super sniper entries. Like if you were to see that, okay, it rejected here, I would have entered right here at that same exact price. Put the stop loss up here. As soon as I see this candle close and it rejected this price, it didn't close above this zone, I'm gonna enter on the next candle. Put my stop loss up here. I'm catching this whole drop down. Any questions before I keep on going? Let me make sure we're all on the same page. Gravestone Doji. Let me show you. Gravestone Doji, where was it? So there's 2. There's the Gravestone Doji, and what's the other one called? It's just the opposite of the Gravestone. So the Gravestone is gonna come down, it's gonna be a long wick like this, and it's gonna close at the same price that it opened at. That's gonna show you that everything above that, it just rejected this whole buy. That's exactly what it's showing you. The other one, I forgot what it's called. Did somebody type it in? Hammer. No, not the hammer. Dragonfly. Yeah, that one. It's gonna come up, and it's gonna look like a T. It's gonna close at the same exact price that it opened at, showing you that it rejected all the price. This whole sell, that's gonna be for the buy. This one's gonna be for the sell. That's what you're gonna want to look for. I'll point a few of those out real quick. Hammer is another one too. So basically you're just setting the zones for your price action and making moves based off that. Yes and no. You're gonna, like I said, you're gonna use the price action zones as another confirmation of what you were already looking at. So for example, let me just walk through like a real life example real quick. let's say, okay. So let's say we want to enter for this sell, right? Let's say we want to enter for the sell. We see the trend line. It rejected the trend line. What I'm going to do, if I'm not catching it here, I'm going to wait for it to come back up. Same thing, the higher highs, I mean, for this example, lower lows, lower highs. What I'm going to do, I'm going to put, and for those that was asking, this one right here, let me just point out real quick. This is a gravestone doji. Closed and opened at the same price, gave a big long wick above it. This is another gravestone. The dragonfly, this is kind of a dragonfly right here. That's what you want to look for. But as far as the price action zone, I'm gonna do the same thing. Start it at the close or open of the candle, and I'm literally just gonna pull it all the way across, just like this. If it comes back up, it's gonna touch this zone and then drop. Now, let's just say, for example, because like I said, it's not always gonna play out like that. Let's just say it pushes past this zone. I'm gonna just mark another one right here, doing the same exact thing. So if it goes past this one, I'm gonna enter on this one. Do the same exact thing. That's if it goes back up. Like I said, it might. We'll just see for this this level right here to see if it breaks through or not. But that's what you're gonna want to look for. So let me just go through a few of those. So this would be as of like a real life example, as if we want to enter for the sell. Let's say we miss this bullet formation right here. We're gonna wait for it to come back up. It's gonna wick this. We're gonna enter, put the stop loss right up there to catch the rest down. If it buys up here and it goes higher, we're gonna wait for this wick up here, put the stop loss right there, enter right there. Every time. Every single time. This is not like guaranteed sniper entries, but most times in this zone, it's gonna be a wick. Like you're entering on wicks, like regardless. Like it's rarely ever gonna be a candle inside of this zone, which is why I love it. Rarely ever gonna be a candle inside that zone. If it is a candle, it's either gonna reject it and go back down, or it's gonna buy up a little above it. So that's why I said patience is associated with price action to the T. So we're gonna look for those. You're gonna look for these bullet patterns. You're gonna look for where where the candles closed and opened at the same exact price and gave wicks like this. It's showing you that it wants to drop every single time. And before you guys ask, this is not a RYG. If it is, I don't like it just because of how far this one is. Like it literally closed at the same at where the other one closed at. I mean below it. I don't really like that. I like it to be a little bit more clean. So for example, let me see, like right here. I like those more, where it's literally steps and it's super close. That's what I'd rather look for. If you want to enter on that, like as you see it played out, I just wouldn't enter on that. So for example, I like this one, this super clean one, just because it literally steps down each time and shows you that, okay, the market is up here. It gave you the red, gave you the yellow, gave you the green. You enter on the green, stop loss up here, you catch this buy down. Now, okay, for example, this is perfect, bro. This is perfect. Let's just say, oh, and this, I didn't even realize the end, this is on top of an M. How you would come out of this trade, once you see, one, it gave a W, but once you see that these wicks are all in the same exact price, I'm coming out. I'm coming out of this trade because it's showing you, bro, it's not going past this. Look at all these wicks right here. First of all, these candles all closed at the same exact price, gave you 4 candles going, literally giving you a trend line up. It came back down, shot it up 2 more times, and rejected the same exact price. It's showing you that, bro, I want to sell so bad, but I can't. I can't sell it right now. We're catching that up. If you were in the sell right here, if you caught this RYG, you're coming out right here. Take that trade out. Enter for the buy. You can literally just ride it wick to wick entries. Caught this sell, came out right here, entered right here, caught it up, enter on these wicks, catch it down, enter on these, catch it up, catch it. Bro, like, it's literally repeating itself every single time. Gave a RYG, rejection wicks, bullet pattern, rejection wicks, rejection wicks. Every single time is doing the same exact thing over and over again. All you have to do is practice your eyes to see it when it's happening. And I guarantee you, bro, you'll catch wick entries. That'll be nothing. That'll be nothing, bro. Same thing. What also price action is 90% of the time, not 90, but most times associated with divergence. So for example, this one, it's giving you wicks each time, literally. If I were to draw a trend line right here, it's touching the same price. Literally, it's showing you, bro, I'm not going past this price. I'm not. And then it gave you divergence. So this is going up, but this one is going down. 3 touches is enough for me. 1, 2, 3, I'm entering on this wick. I'm cashing it down. And I see divergence. That's 1 confirmation, 3 confirmations. And if you wanted to, this is a pattern. I forget what it's called. I forget what it's called, but this is literally showing you so many confirmations that, yo, I'm not buying. Like, as much as I want to, reject. You enter on this wick, you catch it, as long as the market holds structure, you don't come out this trade. I don't care if your daily goal is 30 pips. I don't care if your daily goal is 30%. If it doesn't break structure, what are you coming out for? There's no reason. This came down, you draw a trend line, it rejected each time. Don't be afraid of these little baby retracements. Let the market do its thing. It came up, dropped, came up, dropped, came up, dropped. Once it breaks trend line, then you come out. Now the structure of the market is broken. This is how you're going to maximize your profits. Because instead of, okay, let's say your daily goal is 30 pips. We caught it on this wick. 30, this is already 60. So 30 pips is right here. Yeah, you can get your daily goal, or you can max out. It came down at 80, went back up, rejected the trend line at 60, dropped down again, came up, rejected the trend line at 100, dropped down, came back up, gave 3 rejections right here at 140. Then it gave a W, broke structure right here. So instead of 30 pips, now you're bagging 200. Now what you're going to do so that you make sure you stay disciplined, if 30 pips is your goal, keep your stop loss there. Put your stop loss at 30 pips. So if it does buy back up, you're disciplined, you got your 30 pips, you're still good for the day. But if you can bag an extra 170, now you can stop trading for the rest of the week. You've cleared your whole week's goal in 1 trade. In a day. You've cleared your whole week's goal just because you waited till market broke to come out the trade. That's why most times I don't really have take profits. I just wait and max out my profit. I'll wait till the market breaks. Because if this continues to drop, if it doesn't break structure, it's gonna keep on going down, down, up, down, up, down, up. Until it breaks, then it's gonna buy. Until that happens, it's gonna keep dropping. So that's how you merge as far as entering on the price action and then where to come out, or like daily goals, like stuff like that. But this is what you want to look for. You want to look for these wicks. You want to look for stuff like this. And once you practice on it, it's gonna be so clear to you that it's gonna be easy. It's gonna be easy to hop on these trades. You're gonna see it a few times and you're gonna be like, bro, like I'm entering here, like putting my stop loss above these wicks, I'm catching this. And it's gonna be easy. I'm telling you, bro. Don't you have to put for TB when play? No, you don't have to. You don't have to put a TB when you enter. I recommend when you first enter the trade, put your stop loss, but most times I figure out my TP after I even enter the trade. Sometimes, not always. I'm gonna go through one more example. What time is it? 6. All right, we're running through this is an hour now. I'm gonna do one more example, and then I'm gonna do questions. Let me see. So this is actually a pretty good example right here. There's a few good examples on this one, actually. A few good examples. Okay. I'm gonna run through them real quick. So off the bat, right here, is doing the same thing that I've been saying this whole time. You get your zone, you see, okay, it rejected each of these. You could have caught this little buy, this little sell down. It wasn't big, but you could have caught that little sell. Same thing with up here. Did the same exact thing. It's pushing up, pushing up, pushing up. And then it also gave another bullet formation right there. Look out for those. It gave another bullet formation. So you want to look for RYGs. You want to look for these wicks. These wicks like this, you want to look for those at the top of some type of like these long like up and downs. You want to look for them like up here or up here, and then vice versa for if it's at the bottom. That's how you get the biggest payouts. So you want to enter on those. Another one came down. Oh, that's what I was gonna show you. The W. This W right here. Literally, bro. I'm telling you, I can't make this up. Can't make this up. It came down into this zone. It respected this same exact wick as that second wick. Touched it, bought up. Every time. I can't make this up. I can't make this up. Same thing with this one. All these wicks. Wicks tell the story. I'm gonna express this so much on this call. Wicks tell the story. It's showing you that, bro, we're not going past this. Like, I don't care how much you want this to sell. I'm not dropping this. Like, it's not happening. So you want to look for stuff like this. Get your rectangle, start it at where all the wicks touch, enter. After three touches, I told you, after 3 touches, I'm entering. I'm gonna put my stop loss right out of that box. I'm gonna catch all this until this breaks structure. So I'm coming out right here. That's every time. So yeah, that pretty much goes through a vast majority, not everything, because I could talk for hours and hours on price action. Another RYG right here. So that just basically goes through how I catch my wick entries, what I look for as far as entering a trade, what I look for as far as looking for wicks, looking for rejections, like stuff like that. And then how you guys are gonna do the same exact thing. I want to train you guys to like be snipers, bro. Like if I see anybody entering on candles anymore, like you're not getting props from me, not yet. Send me screenshots of your wicks. Then I'm gonna give you big ups. With that being said, you look for RYG formations on the 15-minute. You can look for RYG on any time frame. If it's on a higher time frame, it's just a bigger play out. So for example, if it feels on the, and that goes with any formation. If it's on the 4 hour, for example, let me see if I can find one. Let me see if I can find a clean one. Yeah, so for example, I actually like this example too. Right here, this is the 4 hour. Let me zoom out a little bit. Right here, it gave another RYG, red, yellow, green. It came up and literally touched the same exact price as the red, showing you that, bro, like, I'm not going past this level. That's why sometimes it's better to put your stop loss above the red. And then it touched that level and dropped. This one went for, if we entered on the green, and because this is the 4 hour, it's going to be a lot more. This one went for 200 pips or so before it bought back up. Whereas if you saw it on the 15-minute, it might be a 50 pip play out or a 30 pip play out. So because it's on a higher time frame, the play is bigger. And that goes for any candle pattern, any chart formation. For example, W's on the 4 hour inside of the zones usually play out bigger than a W inside the zone like that, or a W on the 5 minute. This one, I showed this example so many times. This one went for like 900 pips or something. Yeah, 1,000 pips. Because it showed a W inside of a major zone. I'm gonna open up for questions. I pretty much went through a vast majority of everything that I was gonna go through for the call. Let me know what you guys think, what questions you have. Engulfing candles, I got you. I'm glad you asked that. An engulfing candle is gonna look like this. So this is called a bullish engulfing candle. This one is gonna be, if it's a bullish one, that means this previous candle has to be red. There's no such thing as a bullish engulfing a bullish. This one has to be red. This one has to be green. It's an engulfing candle because this one, they start at the same exact price, but this bullish candle passed it. It engulfed it, hence the name. It's an engulfing candle. Same thing with a bearish engulfing. They're gonna start the same exact price. This one is gonna be red. Oh, whoops. What the hell? This one is gonna be red, and this one is gonna be green right here. This is the bearish engulfing. I like entering on these because they carry momentum. As soon as you enter, most times you won't even be in negative. Most times, or sometimes. What I recommend, or not recommend, this is what I do. If I enter here, I'm putting the stop loss right above the previous candle. If it's a bearish, and right below the previous candle if it's a bullish. Just because this is minimizing, this is keeping my stop loss super tight. That's just what I do. If you want to do something different, that's fine. Where can we go to get more in-depth info on price action in RYG? I have a video for the stoplight method. DM me and I can send it to you. As far as price action, I can do another video on like different forms of price action, like stuff like that. But I went over a lot on this call. Thanks. I see every time I didn't know what it was. Yeah, facts. This video, I haven't gone in depth on price action on a call until this call. So you're getting a lot of information on this one. And this is the first time I've even showed price action zones. I haven't showed that to anybody. That's something that I found out, not even found out about, that I started doing and noticed maybe like 2 weeks ago. And I just been like fiddling around with it, playing with it. And then I've seen it happened a few times, so I hopped in a trade and it played out pretty good. Where are you gonna post this recording? That's a good question. I'm gonna see if I can post it in the chat. If I can't, I'm just gonna distribute it. Whoever wants it, I'll send it to you personally. Is there anything that I didn't go over, or something that I said frequently that you still don't understand, or I didn't explain enough that you guys want me to go over real quick?
Hey, Brody, quick question. Excellent training, by the way. Definitely got more in-depth understanding of how to snipe. My question is, you had said something, I don't know if you said a bullet, what was it, bullet formation?
Yeah.
I was driving, so I missed when you went over that. Is it possible we could just go over that one more time?
Yeah, I got you.
We just changed him, so your mom just changed him.
Yeah, thank you. Bullet formation, and even this one, like I just found out about this one, like probably like last week. And this is so for those who trade a lot or you want to advance in trading, I recommend going back in the market and just looking for things that happen multiple times. Look, because that's how I found out about this. I was just like going back in the market and I was like, yo, like hold up, I saw that, I've seen that pattern before. I kept on looking, and every time I saw that it formed, there was a drop right after. Let me see if I can find it on this one. I don't think this one is as frequent as the other ones though. This is kind of one, but that play out wasn't as big. So right here, there's actually two right here. So a bullet candle pattern is gonna be this right here. Each of these candles, and it doesn't always have to, but this is just another confirmation. Each of these candles closed at the same exact price. It came up once, twice, 3 times. That's exactly what it does. These two are usually gonna be the same exact price. And then it's almost like a head and shoulders, but for wicks. Like if there was any way I can describe it to like the simplest way, that's what it is. Head and then shoulders. But for wicks. You're gonna enter on the second shoulder, stop loss up here, you're gonna catch it down. Yeah, that's exactly how I would explain it actually. So look for these at the top of, like if you know, okay, this is about a reverse. Look for something like this, or this is about to drop. Look for a chart. Excuse me. Look for a bullet pattern. Put your stop loss above the head, and then catch it down. Or look for a bullet pattern at the top of a Head and Shoulders, at the top of a M, any sell pattern basically. Yeah, glad I answered your question, bro. Any other questions? I think that pretty much goes through everything.
Hey, bro, do you know when this recording will be available? I definitely want to comb through it again. Just because I know I missed out on some stuff.
Word. It's probably gonna take some time to compress after, or whatever they call it. After it's done, I'll probably start sending it out automatically. Whoever wants it, I'll send it out to them. I'm gonna talk to Ty or Marlon about putting it in the chat. But I know you need like a specific pattern on Discord to even post videos like this on there. So I'll figure it out. For the bullet pattern, must the candles close on the same level? No, not always. So for example, this one didn't right here. These close at different levels. For the bullet pattern, you're just looking at the wicks. I was just using this as an example just because that's another confirmation. All you're looking for is, all you're looking for is these 3 wicks to come up like this. That's where you're gonna want to look for. Yo, I gave you guys some super sauce, bro. Drop some fire emojis, bro. Let me see some hype. I need some energy. I should see everybody sniping next week, bro. I'm telling you, I don't want to hear nothing. I don't want to see nothing. If you guys are entering on candles, I don't want to see like, yo, I caught this trade and whatever. Like, bro, I don't want to see it. Like, I don't. If send me all screenshots of your wick entries. Send me screenshots of like stuff like that. Tag me, Blue Money Josh, on Instagram. I'm gonna put it in the chat. Tag me on Instagram if you caught a wick entry. Like, bro, we're all 6 figures by the end of this year, guaranteed. Like, we're making it happen. No excuses. I'm gonna go ahead and close out. I appreciate everybody for tuning in. I hope you guys really appreciated this knowledge. All you have to do now, go back and study it. That's all we're doing. So I'll see y'all. I'll let you guys know as soon as this video is ready. And I'll see y'all next week.